Welcome to the Cambridge Financial Podcast with Bert Salazar, CEO at Cambridge Financial Partners, LLC. This podcast is all about tax-preferred retirement planning, economics, financial risk management, and achieving a risk-free and successful financial life. Now, your host, Bert Salazar. Bert Salazar. Bert Salazar.
Hey, good day, everyone. Welcome to episode 92 of your tax-free life podcast. I'm excited to be here with all of you today. As always, we're here every single week providing you with information and education because, you know, at the end of the day, as I always say, information without education always leads to failure. So today's podcast is going to be an interesting one. And it's the type of podcast and webinar that I do or video conference that I do with the vast majority of my clients and listeners toward the end of the year. And the name of this podcast today is Why Do You Keep Rearranging the Chairs on the Titanic? And you may think, well, Bert, why would you want to do a podcast and talk about the Titanic? Well, there's a lot of financial similarities between the sinking of the Titanic and the type of work that I engage my clients on a regular basis. So I thought it'd be fun. I thought it's going to hopefully drive a very important point home to all of you. As you all know, we're fast approaching the holiday season. And by the way, I'm very appreciative of the time that we have spent together discussing, analyzing financial and retirement topics, you know, along the way. So I'm very proud of that, and I want to thank each and every one of you that listen to me on a weekly basis, and that's something very, very important. Now, most important, I'm also thankful for all the support that all of you have provided, not only in 2019, but in 2018 and 2017 when we started doing these podcasts. Now, normally during the fourth quarter of every year, I write a wake-up call article, and that could be an article, that could be a video conference, that could be a blog that I may write, and so forth, that primarily helps many of my clients and or followers avoid the definition of insanity. Now, I'm sure that most of you know what that definition is, but interesting enough, the definition of insanity is doing the same things over and over again while expecting different results. And this is something that I do every day because I have been in the industry for almost 30 years. So I have had clients that have been with me for almost 30 years. And one of the things that I try to say in a lot of these podcasts and webinars and seminars that I conduct is that I can help everyone. I can definitely help everyone, but I can't save everyone. And that's a challenging part of my business. That's something that I deal with and I wrestle with every single day. So here it goes. Many of you attend my retirement workshops, podcast, and webinars on an ongoing basis. Many more of you actually read my articles and blogs relating to tax planning, insurance, and retirement distribution planning. Yet, the vast majority of you, except for the exceptional few, continue to rearrange the chairs on your financial Titanic, hoping for a better result at some point in time in the future. And what I can tell you about that is that hope is not a financial strategy. So if you're hoping to have something good happen to you in the future and you're not planning for it, chances are it's never going to happen. Now, I hear all the excuses. Well, Bert, I have no time. I'm working on certain projects at this point in time. I'm too busy at work. My financial situation is okay. I hope to make some changes in the future, and many others. But here's my answer to those of you that feel that way. Never allow good enough to be good enough. And here's a reason why. I'm going to give you 10 pointers that hopefully are going to get you to wake up. And again, some of you do a very, very good job, and some of you reach out to me on a regular basis. Others actually reach out to me on a weekly basis, giving me feedback on the podcast and the seminars and the webinars that I produce regularly. So I'm very proud of that, and I thank you all. But the vast majority of you are pretty much just rearranging the chairs on the Titanic, especially after it hit the iceberg. So I'm going to give you some 10 items that I think are going to be very, very critical for all of you to start to consider for the rest of your life. But most important right now, because we're in the fourth quarter, and any type of tax planning needs to be done now because you can't wait any longer in order to avoid the inevitable. So point number one, it has been documented that employees, waiters, and bartenders were actually rearranging the chairs on the Titanic after it hit the iceberg. And I correlate that because most Americans, and many of you listening to this podcast or reading my blog, have already hit a financial iceberg and you don't even know it. So a lot of you on this call have already hit a financial iceberg. But you know, the biggest damage that an iceberg can do is the what is below the surface. So it's something that you can't see. And again, many of you have already hit a financial iceberg, but unless you're able to do some proper tax planning, there's a very high probability that by the time you figure it out, it's going to be way, way, way too late. Point number two, there are only 7 years left on the Tax Cuts and Jobs Act, which most of you have benefited from, but only the exceptional few, again, have taken tax and financial steps to maximize this incredible opportunity. As you all know, the Tax Cuts and Jobs Act is going to sunset December 31st, 2025. So when we all wake up on January 1, the world is going to be totally different. And there's only 7 years left. So the vast majority of you already missed 2018. You could have done a tremendous amount of tax planning then, but you failed to do so. So now you only have 7 years, and if you keep doing this, going this way, you're going to be missing this year as well, because we're already in the fourth quarter of 2019. Point number three, I would argue that 99% of you missed the first year of these tax cuts benefits without taking any proactive approach in order to plug the holes in your financial Titanic, because your ship is sinking, you just don't know it. Point number four, most of you continue to max fund your IRAs and 401ks with no clue whatsoever about your personal tax liabilities in your retirement future, because you have not done any proper calculations of future tax planning, and you have not done any type of projections regarding where tax liabilities may be for you and your family in the future. Point number five, for the vast majority of you, you're going to be forced to pay taxes at retirement on all your IRAs, your 401ks, your 403bs, your pensions, your Social Security benefits, your mutual fund accounts, your CDs, and all of your savings. Even your real estate investments will suffer capital gains taxes, ordinary income taxes, dividend income taxes, and that would be short and long-term dividend rates at a point in time when taxes will be much higher than they are today. Now, you cannot blame anyone but yourselves, because for the last 2 years, I have been telling you as to where taxes are going to be in the future. I have been educating you. We have been talking about the national debt, which is sitting at almost $23 trillion and counting. We have been talking about the unfunded liabilities, which are now at $126 trillion. And for those of you that may not know, unfunded liabilities are all those promises that the U.S. government has made to all of us that they don't have the money to keep. Social Security, Medicare, Medicaid, Medicare Part D, interest on the national debt. And that's sitting at $126 trillion and counting. So because of that situation, taxes are going to have to go much, much higher in the future than they are today, but you don't have any shield, you don't have any protection in order to fight those issues because of the fact that you have failed to do proper tax planning. Point number 6, we're currently living at historically high debt and historically low taxes. But that's all going to change in January 1 of 2026, because when we all wake up that day, the old tax law is going to come into effect, which now the tax brackets and the liabilities for those brackets were higher. And most important, the standard deduction is going to be lower. So all of us, when we wake up January 1 of 2026, we're going to be in a higher tax bracket than we were the day before. Now, there will be a tax Armageddon sometime in January 2028 or sometime in January 2029 as well. But 2026 will be bad enough for many of you at this point in time. Point number 7 on this conversation that we're having. Again, except for the exceptional few, most of you do not have guaranteed income sources in retirement. And most of you, sadly enough, are going to run out of money before you run out of life. For this reason, you may have to move in with your children at an old age. You may have to become a Walmart greeter at an advanced age in your lives, and or a combination of both. And I'm dead serious about this because I've been retired over 70 times. I have a lot of clients that are in retirement, and any time I have to do some retirement planning or tax planning or retirement distribution for a client, I actually retire with each and every one of them, because I get immersed in what they've done, in what they've done right, in what they've done wrong, and I try to repair it along the way. Many times, by the time I engage some of these clients, it's kind of late because they had been working with other advisors for many, many years. By the way, I usually have 2 type of clients that come to see me. One type is those I will say, Bert, I wish I would have met with you 20 years ago. And then I have another set of clients that say, you know what, Bert, I wish I would have listened to you 20 years ago when you were talking to me about all these things and all these concerns that you had regarding my retirement, and I really didn't pay attention. I wish I would have paid attention to you 20 years ago. Now, for the first group, the one that they wish they would have met me 20 years earlier, obviously there's nothing that I can do. But for those of you that have been listening to me for many, many years, or have been engaged with me in some shape or form for the past 20 years, and you have failed to do something, then shame on you. Because at the end of the day, I don't want to be responsible, because again, I can help everyone, but I can't save everyone. You have to take part, and you have to take responsibility for everything that you're doing, not only now, but also in the future. Point number 8, many of you will be forced to count pennies at retirement because you didn't plan to fail. You just failed to plan. Taxation and inflation alone is going to destroy your retirement plan. And obviously the next few points are going to be even more critical from a retirement distribution standpoint. Now, there are only 10 points, so now point number 9, and this is according to recent statistics, but I'm seeing it with many of my clients. And this is scary. This is really, really scary. 70% of you will experience a long-term care illness that will accelerate the consumption of all of your retirement assets while disinheriting your surviving spouses and or significant others along the way as well. Sadly enough, most of you can protect yourselves from this risk, but very few of you will do it as you're too busy in your current life. Now, again, because of the fact that people are living a lot longer today than ever before, we're much more susceptible to having long-term care issues and concerns in retirement. Always remember that if you have a long-term care illness, you're going to have to find ways to pay the additional cost. And that additional cost can be anywhere between $5,000 to $10,000 a month, depending on how chronic your situation may be. If you don't plan for that, where do you think that money's going to come from? It's going to come from your retirement assets. And if you're in long-term care for 2 to 3 years or 5 or 10 years, depending on what it is that you may have, you're definitely going to be accelerating the invasion of those retirement assets in order to mitigate the additional expenses. And then once you pass away, if your surviving spouse is alive, what is he or she gonna have left? More than likely, very little, if any. And therefore, you have just disinherited your family, and you didn't have to do so. But because of the fact that life gets in the way for many of you, more than likely, this is what definitely going to happen. And last but not least is point number 10. Almost 100% of you will pay more in taxes at retirement than you do today. Why? Because in retirement, most of your tax deductions, exemptions, and credits will be gone. And that will immediately increase your personal tax liabilities. This is what people don't understand. See, while you're working, you're putting money on away on your IRAs, your 401k, so you're taking deductions for that. Many of you may have a mortgage, so you're taking your mortgage interest deductions. Most of you that are of charitable nature, you may be making contributions to charity. But at the point in time that you retire, all of those things are going to go away. Number one, you're no longer employed, so therefore you can't put money away into an IRA or 401k, so you can't take a deduction on that. Number two, either your mortgage is going to be paid for, or you've been making mortgage payments for so many years that the vast majority of those payments now are going to be principal payments as opposed to interest payments. So your deductions, if you have any, will be very little to say the least. And then obviously if you were making charitable contributions while you were employed, what I have seen from many of my clients is when they do retire, they start shifting from making charitable contributions to donating their time and effort because they're no longer employed and they have to be able to watch their dollars a lot closer than they did before. So those are things that are very, very critical. Now, needless to say, taxes will more than likely have to double in the U.S. or a country's going to go bankrupt. Especially, if you listen to all these political pundits that, because now we're getting closer to 2020, so we're going to have an election year. And what do you think is happening today? Especially those of you, and again, I'm talking about the exceptional few, because most of you get involved in politics, but you really don't dig deep and look into what these politicians are doing and saying and what the impact of those decisions may be and those approvals may be on your personal financial lives for many, many years to come. So if you think about it right now, because we are in the middle of an election campaign going on, our beloved politicians, and I put that in quotes, are touting, for instance, everything's going to be free education, but most important, they're touting Medicare for all. In order to get the votes of blindfolded, and I do mean blindfolded, Americans that have no clue about math. Because if you do just some simple calculations, you would identify that, nobody truly knows how expensive free can be. And for those of you that may not know this, just do some simple math. Take a look at the unfunded liabilities that we have in this country today at $126 trillion. Take a look at the national debt, which is our almost $23 trillion. Take a look at our national deficit, which in 2019, for the first year in history, hit a $1 trillion in deficit. And then all of a sudden you have to add free schooling, you have to add Medicare for all. So those are things that are going to be very critical. And what I say to all these people that are touting Medicare for all, I go, crap. I said, we can't even afford Medicare for some, let alone Medicare for all. So where are you coming from? I mean, right now the unfunded liability for Medicare is much, much higher than the unfunded liability for Social Security. And Medicare for all are for the vast majority of us that are hit the age of 65. So if you fast forward now doing Medicare for all, and by the way, I'm not getting into any political issues here because I never do that. It doesn't matter which side of the aisle you're in, whether you're an independent, whether you're a Republican or a Democrat, they're all making the same mistakes, because once they get to Washington, they think they own the world, and that they think that they own our wallets and our pockets, and they want to get as much of it as they possibly can. So, although I can go another 30 minutes, and we've been at it for 20 minutes now, although I can go another 30 minutes to an hour talking about these things, or I can write another 10 pages of things that you should be doing today that you're not doing, and more than likely never will, even with the factual information that I'm providing to all of you, only the exceptional few will actually reach out to me in 2019, and we're now in the fourth quarter. It is actually November 1st, for those of you that are listening today. Very few of you are going to reach out to me and say, hey, Bert, can you go ahead and put a tax planning report for me and see if you can help me maximize all my tax benefits between now and December 31st of 2025. Obviously, for those of you that reach out, as I always tell you at every single podcast that I do, there's no cost or obligation for me to put together either a Social Security report and or a tax planning report, and they all come into play handsomely when we put it together and discuss it with all of you. So the one thing I can tell you is, if you have proper financial structure, it will buy you retirement freedom. If you don't have financial structure, chances are that you're going to run out of money before you run out of life, and your retirement life is not going to be anywhere near what you expected it to be prior to retirement. So I think it's important for you to take action today, because tomorrow is promised to no one. So if you want to take action, feel free to reach out to me. You can call me at area code 786-766-1042. You can also send me an email at bert@gablestaxgroup.com, and I'll be happy to set up a 30-minute conference call with you in order to discuss your particular situation. Always remember that my number one goal, and that of my company, is to kind of help you change the way that you see things, because when you change the way that you see things, the things that you see change. So again, thanks very much for giving me a few minutes of your time today. Hopefully it didn't hit you too bad, but somebody has to do it. So my number one goal is as well to kind of save you from yourselves. So we'll talk again next week. Take care, have a wonderful weekend, and we'll talk soon. Bye-bye.